In this video, I'm going to talk about cryptocurrency taxes in Germany. I'll talk about how is crypto taxed in Germany, how is it calculated, the tax-free allowance and loss adjustment. Don't forget to watch till the end, as I will also show you the crypto tax filing documents as well. Hey friends, welcome back to the channel. If you're new here, my name is Essen. I'm a researcher based in Germany, and on this channel we explore the strategies and tools that can help us achieve financial freedom. Talking about taxes is always complicated, and when it comes to taxes on cryptocurrency, it becomes even complicated. But I will try to keep things as simple as possible. Alright, firstly, crypto taxes in Germany are based on the income tax law, and the taxes are cut on your tax rate. So it can be up to 45% of your profits. So how exactly can you calculate the profits? To do that, simply take your selling price and subtract your buying price, and also subtract any exchange fees that took place during both buying and selling processes. For example, you bought 100 euros worth of Bitcoin and the exchange fee was 1 euro, along with the credit card fee if you bought using a credit card. So you sold it at 120 euros, but there was again 1 euro transaction fee for selling. So here your profit would be 120 euros minus 1 minus 100 and again minus 1, which would be 18 euros. Now the tax would be applicable on this 18 euros. This was pretty simple, but this doesn't happen as many people buy crypto at various intervals, and you cannot distinguish if you bought 100 euros worth of crypto 5 times and then later on you sold a small amount. Here various strategies can be applied, like FIFO or LIFO. FIFO means first in and first out, and LIFO means last in and first out. These two mean exactly as they sound. In FIFO, you are saying that whichever crypto you are selling is the first one that you bought, and the opposite is true for LIFO. Let me explain. If you bought 100 euros worth of Bitcoin at 3 different intervals, now that 300 euros worth of Bitcoin has now increased in value. So when you sell 100 euros worth from this new amount, you can say that you are selling this amount from the first Bitcoin order or the last one. In many cases, FIFO is the preferred method because of the long-term tax rate on crypto. That is, if you hold a cryptocurrency for more than a year and then sell it, the profit on it is going to be tax-free. Now going back to our example, if one of our orders is less than 12 months, we can always say that we are selling that 1-year-old crypto, thus making it tax-free. You can obviously decide to use LIFO. Maybe all your buying orders are less than 1 year old and the newer crypto is on a higher cost basis, meaning that less taxes would apply on that. One thing you can do here is that you can have separate exchanges for your long-term and your short-term trades. For example, I use Binance for my long-term crypto holding and eToro for my trades. And in eToro, I can easily distinguish each of my trades, as you can see here. Okay, now you know how much taxes you need to pay. But selling cryptocurrency isn't the only time where taxes are applicable. Taxes are applicable each time a taxable event occurs. So what are these taxable events? The first one is selling crypto against fiat currency. As I mentioned before, if you bought some crypto and sold it against fiat, euro, dollar, etc. within a year at a higher price, this profit would be taxable. It doesn't matter if you transfer the profit to your bank, keep it on the exchange, or move it to another exchange. Another taxable event would be converting from one crypto to another. For example, if you convert from Bitcoin to Ethereum and a profit is involved, that is, you bought the Bitcoin at, let's say, $40,000, and now at the time of converting, it is worth $50,000. This conversion would be taxable even if you don't sell your Ethereum. Next taxable event would be if you buy anything with your cryptocurrency. When I say buy anything, I mean anything. A software, computer hardware, even if you buy a burger with your Bitcoin, this can be taxable. If at the time of buying the burger, the value of your Bitcoin was higher than when you bought it. What isn't a taxable event is holding your cryptocurrency, moving it from one exchange to another, moving it from a hot wallet to a cold wallet, or the other way around. These are not taxable events. Next comes staking. Putting your crypto into staking is not a taxable event. Earning staking rewards might or might not be considered as taxable, as there's a lot of debate going on this topic. Depending on your tax officer, they can either consider it taxable or not. You can argue that selling the staking rewards is not taxable as no buying took place, but as I said, that depends on your case officer. Moving your crypto from one staking provider to another is not taxable. When it comes to selling the original crypto that was staked, the problem arises that this crypto was used to create income, that is the staking reward. Thus, Here the selling of the crypto would be tax-free after 10 years and not the first year. But that again depends on the tax officer handling your case. However, many do argue that the 1-year period would not be applicable here, so be careful when you do decide to stake your crypto. For airdrops, the more you work for getting the airdrop, the more the chances of arguments that it should be taxed. But if the drop was where you didn't do anything, like the ENS drop, you had an ETH domain and you just got the tokens, then it's going to be tax-free. We have talked a lot about profits. Let's talk about losses. But before I continue, if you are liking this video so far, please consider hitting the like button. Alright, please bear in mind, the same way profits are tax-free after a year, losses incurred after holding a crypto for more than a year cannot be adjusted. Or simply put, if you sell a crypto after holding it for more than a year and you sell it at a loss, you will not be able to claim those losses. Okay, so you sold some crypto at a loss within a year of buying it. How can you claim the losses? Well, you can only adjust your crypto losses against profits you may have gotten from selling other crypto or profits that fall under the asset class sonstige Einkünfte. You can read all the things that fall under this category on this page. I'll put a link in the description below. But what doesn't fall under this category is your income, so you cannot claim your crypto losses against your regular income from your full-time or your part-time job. You also cannot claim crypto losses against any capital gains from selling stocks and ETFs. So please keep that in mind. Let's talk about tax filing. Tax filing is the final amount you put in the tax return. Let's look at the tax return document where we can put our crypto details. So this document is called the Anlage SO. Almost at the bottom of this document, in number 42 is where we can place all our cryptocurrencies. For example, Bitcoin, Ethereum, XRP, etc. As you can see in this official document, we don't have many options. We just have one line to put all of our crypto details. In number 43, we can put the dates on which we started buying the cryptocurrency and when we sold our assets. Now this can be confusing as you may have bought and sold various cryptocurrencies at many different time intervals. So here tax reporting comes into play. What tax reporting means is that you report everything. As there is no official format for this, you can use an Excel file or whatever you find easy to do. But in this reporting file, you need to put each and every detail about your transactions, like when you bought a specific cryptocurrency, at which rate, and if you sold it, how much profit you got. You can use the method I explained earlier in the video. Repeat this for each and every crypto you bought in the year you are filing for. Using that file, you can select the earliest buying date and the latest selling date and put them into number 43. In number 44, you put in the sum of all of the selling prices of all of your transactions from your reporting file. In 45, you put the sum of the buying prices of all of the transactions, and in 46 you put in the additional costs like exchange fees, etc. And in 47 you put in your profit by subtracting 45 and 46 from 44. Obviously this is very complicated. Many softwares help you make the tax reporting file, and if you use an app like WonderTax, you can have an easier time filing for your crypto tax. I have discussed the tax filing process using WonderTax app in a separate video. Sometimes the tax office even asks for how you came up with the value in the columns 44 to 47. Here the tax reporting file would come in handy, as you can simply send this file to the tax office as your proof. You can even send this reporting file along with your tax return if you want to be on the safer side. One thing I should mention is that tax offices are way behind right now, and many people believe that they can get away with not reporting their gains, as they might think their trades were never brought to a bank account, or maybe they did all of their trades on a decentralized exchange, so they cannot be tracked. But remember, the tax office can always ask for proof for your filing up to 10 years in the past, and they are actively developing new technologies which can help them track things in the future. In the past, Coinbase gave a lot of data to the IRS, and there is tax treaty between the US and the German government, so they do share information with one another. There is KYC, banks also have some money laundering checks, so there are always ways for the government to know what you are doing. If you get into the tax fraud department of the government, things can get very uncomfortable very quickly. Just remember, even Al Capone, who was one of the biggest gangsters in the Prohibition era, was caught by the IRS on tax fraud. As Benjamin Franklin said, in this world, nothing can be said to be certain except death and taxes. So please be careful. Click here if you want to know how to make a decentralized website, and here if you want to increase your income in Germany. Thanks for watching, bleib gesund, and I'll see you in this video.